Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, almost end of the week on a short week here, July 7th. And some pretty big economic news releases. Tomorrow will be the big day, but these were pretty impactful. So let's go ahead and take a look here. We'll start off with the ADP unemployment number. Again, this hasn't been the most accurate thing, but we'll touch on that here. You know, we had previous month came in at 38,000, so it was real low. There was no estimate, but it came in at 157,000. 157,000. So right now the market obviously is enjoying that. They're kind of thinking that might be a correlation for tomorrow. Maybe we'll have a really good number for tomorrow. So we'll have to wait and see. The last time we saw this, it was probably several months ago. Actually, when it came in really high, we had a really low number, the opposite effect. So it'll be interesting tomorrow to see what kind of numbers we get on when the Bureau of Labor reports their numbers. So let's go ahead and take a look at the initial jobless claims. And the previous week we had 432,000. We were kind of estimated to drop a little bit, 424,000, but it actually dropped down to 418,000. So again, those two coupled together really is making the stock market look really good today. So the stock market, as you'll see, is up across the board. So let's go ahead and take a look at the headline news, and we'll start off with, of course, we said the stock market's up. There's a part that came out with the European Central Bank, Trichet. He suspended the minimum debt rating requirement to use as collateral in lieu of a loan. So he's kind of helping out Greece and then potentially the other countries that may need to be bailed again or another issue. So this will, this kind of alleviate of some of the issues that they've been hurdles that they're probably running into about trying to lend to some of these to try to keep them afloat, so to speak. So, because obviously the debt crisis over there is pretty big. Obviously, we have our own here in the U.S., but of course that we're not hearing too much of that. What we are hearing is Obama's meeting with Congress to discuss about the raising the limit of the debt ceiling. And in turn, he's offering to negotiate cuts in Social Security and Medicare. So obviously those can't be real popular topics for a lot of people. But hey, also another thing to watch out for is I noticed that about a week ago we were about at $91 per barrel on oil, and today I noticed that we're just above $98, and earlier in the week we were at 96. So it looks like it's starting to kind of creep up again. This could lead to obviously higher prices and such again. So definitely want to keep an eye on see where oil goes. So let's go ahead and take a look at where bond market is and where interest rates lie. So here's today. We actually started the day. We had a little bit of a rally yesterday. We did well, but we dropped down about 22 basis points from where we left off. We did have an opening gap to the worst. I do think we'll close this gap either today or probably, or most likely even tomorrow with the job numbers coming out. We did start down a little bit even further, about 6 basis points. Right now we're up about 3 basis points. So at some point this gap will close up. So this is something we do really have to kind of watch carefully, especially around here. As we saw a couple of times here, a good friend of mine, Dan Rowich, who used to be a bond trader, kind of pointed this out to us. We had this line here. We've tested about 3-4 times already. Especially back in May, we had it tested 3 times. Now, so we're testing it again. Usually, the more you test it, and usually takes about 4 or 5 times, you test it, that means that floor becomes weaker and it can easily go the opposite direction. And what that would translate is that when you crash through this, obviously the interest rates will start rising. We're going to have a lot of volatility in the market until we can get this out of the play with regards to the debt ceiling and Medicare and stuff, so we can get that out of the market, because right now it's creating some uncertainty in the market, and once we get some type of resolution with that, it could probably help lessen the volatility out there. But right now interest rates did go up a little bit from yesterday. Obviously we saw the drop there, and tomorrow will be the big day with the job numbers, so be prepared. So that'll kind of wrap up things for us. Also keep in mind, again, I'm also a mortgage lender, and if you need any assistance in regards to home buying or refinancing with mortgage needs here in California, I'd love to be able to earn your business. Please feel free to give me a call. You can contact me through my website at californiamortgagetips.com, which you can see on the front page. Thank you and have a great day.